Okay, welcome to my channel. So today I'm going to talk about the 5-minute opening range strategy. So there are 6 simple steps to follow when you're trying to perform the 5-minute opening range strategy. Step number 1 is you need to be patient and wait for the first 5-minute candle to close. Step number 2, you would draw a green line on the top of the 5-minute range. And step number 3 is draw a red line at the bottom of the 5-minute range. Once you've done that, you'll again need to wait for either a breakout above the green line with displacement or below the red line with displacement for step number 4. Step number 5, once the breakout happens, whether it's upside or downside, we'll have to wait for the price to come back and test either of those lines, red or green. Step number 6, if a strong candle reaction is seen at the line, we enter the trade with a 1 to 2 risk reward. We can also keep some runners for more reward, more than the 1 to 2, but at a minimum, we need to exit at a 1 to 2 risk reward. Now let's talk about candlesticks. So what does it mean when I say a strong candle? If you look at the left-hand side, this is a green bullish candle. The open is where the price would open on this candle. This could be any time frame. So it could be a 1 minute, 5 minute, 1 hour, 1 day, 1 week, 1 month candle. Doesn't matter. For our 5-minute opening range, obviously we're looking at the 5 minutes and the 1 minute candles. So if the price point opens at this stage, this looks like the sellers tried to push it down, which is shown by this lower shadow or wick. This was the low price at that point. And then the buyers stepped back in, pushed it all the way up to the top, which is the high. And then the sellers pushed it back down to close at a price point which is higher than where it opened, which is why the body is green. So that's more bullish than bearish, but it didn't actually close all the way at the top, which means there are still some sellers over here. On the right-hand side, you can see a bearish candle shown with the red body. So for this candle, the opening price was at this level here. Buyers potentially pushed it up to this high point, but then the sellers aggressively came in and pushed the price all the way down, which is why you see this shadow or the wick. Price continued to go down to the bottom of the range, but then some buyers stepped up and pushed it back up to this level. So overall, there are more sellers than buyers, but the sellers weren't strong enough to close it all the way at the bottom. Now let's look at the different types of candles in terms of strength. So this first one, the buyers are in full control. The price started over here, and buyers stepped in aggressively and pushed it all the way to the top with no shadows, no wicks. This is the most bullish candle you can see. This is a hammer candle, which is also very bullish. In this case, the price opened at this price point, at this level. The sellers came in and pushed it all the way down, but then the buyers became very aggressive in buying and pushed the price back all the way to the opening price point and further up to the top with, again, no shadow, no wick on the top. This is very bullish as well. So these are my two favorite candles if I'm going long. The neutral indecision doji. This is where the price starts. It could have gone up, back down, back up to close here, or it could have gone down, back up, back down to close here. Both ways, there's a very long shadow on the top, very long shadow at the bottom, which means that there's indecision. Both buyers and sellers are struggling to decide which way the price needs to go, or more importantly, there is some level of agreement that this is a fair price. For this candle, it's a weak bullish candle. So the price starts here. Buyers come in aggressively, pushing it all the way to the top, but then the sellers step back in and pulled it back down to this price point. More than 50% retracement, which means that the buyers were not in control and the sellers seem to have gotten an edge in terms of pushing the price back down. It's still bullish because it's a green candle, but it's one of the weaker bullish candles. Flipping it to the seller's side, the red candles. In this case, the price started here. The seller stepped in aggressively and pushed it all the way to the bottom with no bottom wick, which shows the seller's in full control. This is a very bearish candle. This one is the inverse hammer, which is also very bearish. And so these four candles actually are the best ones to trade, especially when it comes to the higher time frames. Buyers tried to step in, but the buyers tried to push the price up, but the sellers stepped in and pulled it back. So the price point for this stock starts here. It gets pushed up all the way to the top, but then the sellers step in and push it further beyond the starting point all the way down with no shadow, no wick. Very aggressive sellers in this case. The neutral indecision doji is the same as the top one, but with the red candle. And then in this case, it's also a weak bearish candle where the sellers tried to push it all the way down, but then the buyers aggressively stepped in and made a close more than 50% retracement with a shadow. Now let's look at an example. This is the ES, the micro E mini, which is the S&P 500 futures. And in this case, I'm showing steps 1, 2, and 3 together. So step 1, wait for the 5-minute candle to show up. So this is the 1 minute. And so you can see 1, 2, 3, 4, 5 minutes counted. Then we draw the green line on the top of the 5 minutes and the red line on the bottom of the 5-minute range. So this is the 5-minute range over here. Then we go to step number 4, where we wait for the price point to break out with displacement. So in this case, on this candle, we had a very strong bullish candle, which gave us a displacement well above the green line. And in this case, we will not go long right away because that's too risky of an entry point. We will wait for the price point to retrace back to the green line and look for a green bullish candle to go ahead and place our orders. So in this case, we wait for the price to come back and test either of those lines. And what you'll notice here is if we went long on this green candle with a 2-to-1, in this case 2.05 risk to reward ratio, you would end up with a good trade, entering at the 5466 points and exiting at 5494. And each point move in the ES mini is $5. So this would have been a $150 trade roughly. Now let's look at another example. So this is a ticker symbol TSLA. This is Tesla, and this is on May 5th, 2025. I'm going to go ahead and press play, and this is on the 1 minute chart. So we're going to wait 5 minutes. So 1, 2, 3, 4, 5. We're going to then put a line showcasing the top of the range and a line showing the bottom of the red, with the red line for the bottom of the 5-minute range. And now basically what we're going to want to see is this price point either breaking this red line with displacement, retracing back, showing a bearish candle, and taking the trade down to the low of day and further to reach our 2-for-1 risk to reward. The other scenario that we could be looking for is for the price to break this green line with displacement, retrace back to the green line, and then take a long position if we see a strong candle, green candle up, and take the trade long with a 2-to-1 risk to reward ratio. So let's press play and see what happens. So right now we're still consolidating within the 5-minute range. It broke the red line with a little bit of displacement. So let's wait and see what happens. The candles, okay, that's a strong displacement. So now we will wait for it to retrace for us to take our short entry. Now, in this case, we have some bullish candles that are closing above the red line. So we need to be a little bit more careful and just wait for confirmation. And there you have it. So this is the confirmation candle showing that the sellers are pushing it down below the red line at a higher volume than the green candles. So this is a good place to enter. So we're going to go ahead and place our entry, and we are going to put our stop loss just above these wicks. And the idea here is to ensure that we only stop out if the 1 minute candle closes above this line. If the 1 minute candle or the price point goes above this line but ends up closing under the line, we will not close our position. We'll be targeting a 2-for-1 risk reward ratio. In this case, is 1.58. So we're going to need to extend this to at least 2-to-1. This is coinciding with the 276.97. So we're going to go ahead and just do a 276.5 as a possible target. And that would be 2.31 risk reward ratio. So let's play and see what happens. So we're getting some sellers, a little bit of a retracement. And there you have it. We achieved our target, we close our position, and we call it a day. 2.3 risk reward ratio by 10:30 a.m. within 1 hour of the market open.